the ground as historic polls because the application of Article 370.
Time for an exclusive conversation here on CNBC TV 18, a rare one as well. This year, one of the biggest movers has been Heritage Foods, the dairy producer and retailer. The board has now approved a proposal to set up an ice cream plant in Telangana. Plans to invest about 200 crores in that plant as well. But not just the ice cream business. If you look at, the overall business of the company, what's the outlook? We have Srideep Kesavan, who's the CEO at the company, joining in to discuss the company's business outlook and capex plans, which are in the pipeline. Thank you, Srideep, for joining in. A pleasure speaking with you. Let's get the ice cream business out of the way first. 200 crores is what the board has proposed to invest. It comes on stream by November 2025. What are typically the asset turns that you get in an ice cream business? Last quarter, you did about 31 crore of revenue from ice cream. So how much does this plant add? And what's your overall target in terms of revenue coming in from the ice cream business?
Thank you very much. Good morning. And thanks for having me on your show. Yes, yesterday our board approved a capital investment of 204 crore rupees in investing and commissioning an ice cream plant in one of our existing facilities, milk processing facilities in Hyderabad. This comes at a time when we are actually maxed out on our existing capacity and we're looking at scaling our business. Answering sharply to your question on asset turns, over a period in time, this investment will help us scale our current ice cream business, which is around 100 plus crores, to more than 600 to 700 crores. That's our expectation over the next 4 to 5 years. And for the capacity to be fully utilized, it'll take us at least 5 or 6 years. In the coming five or 6 years, we should be able to do that.
Srideep, good morning. Thank you for joining in. I'd like to speak to you. Just a follow-up to that, how do you plan on funding this CAPEX? 1 and 2, how has business looked like in this quarter so far? What have been the demand trends that you're witnessing? And what have been the average, say, procurement prices for milk so far this quarter?
Unfortunately, I won't be able to give you any specifics about the current quarter. But if you have followed our first quarter results, you know that the company is on a good trajectory. And this is not just a one-quarter performance. If you look back to the last 9 or 10 quarters, the company has actually led growth for the dairy industry. Actually, we've been one of the fastest growing dairy companies in the private space, or actually listed space. So the momentum is very good as far as the business is concerned. And answering specifically to the question on procurement prices, I think we are witnessing a good amount of stability in the rural economy. And it is not just to do with dairying. Actually, if you look at the agricultural commodity space itself, the commodity prices are relatively stable. We are seeing good prices given out to farmers, which means that the farm economy is actually looking really good. Dairy prices are really good. It is profitable for the dairy farmers to participate in dairying today. And the monsoon has been really good. And across our markets, we are seeing planting happening on time. And we're seeing a lot of green fodder. So all in all, actually, it is looking a good and a stable period for a dairy business.
All right, good and a stable period for dairy business. So let's get in some more numbers out of the way. You can't talk about this quarter. I'm sure you can talk about, the targets for this year. The last quarter, for the first time, you crossed 1,000 crore per quarter in terms of a revenue run rate. Should we annualize that and look at close to around 4,000, a little more than that when it comes to the entire year's revenue? And while you talk about that, also give us a sense of where you expect margins to be in this year because of, 1, stability in procurement prices, and secondly, increase in proportion coming in from your value-added products.
Yeah, thank you for that question. The business actually has been trending a mid-teens kind of growth rate for quite some time. And it is not something that has happened only in the Q1 of this year. So I think that we should expect that growth momentum to continue. I cannot give any specifics, but I think our recent past performance in the last 8 to 9 quarters is testimony to the fact that we can continue that growth momentum going forward as well. So a mid-teens kind of growth is what we expect out of the business. And that happens because our value-added products are growing upwards of 20%. In Q1, we ended with 38.5% of our contribution from value-added products. You must be aware that Heritage is an integrated dairy player with a full range of value-added dairy. Ice cream is just one of the product clusters that we play in. We are quite strong in the dairy food space with curd and paneer, which is actually growing very well for us. And we continue to see growth in paneer as a category. Drinkables is another area that where we are seeing a lot of growth. In fact, just 6 months back, we had invested, we had infused capital to create a facility to pack aseptic cartons. So we have milkshakes and cold coffee and lassis in cartons today, which is also expanding really well. Sometime back, I think it was in the month of June, we launched ghee-based laddus, which actually strengthens our position in the dairy sweets category. And now we have ice creams. Ice creams also has been growing robustly for the last 3 or 4 years. In fact, COVID was an inflection point, and the industry as such.
Shrideep, sorry to cut you in due to paucity of time. I wanted to ask you one very important question on margins. First, on the gross margin bit, you're heading towards your FY21 levels of around 25%. What is the outlook there? And do you see double-digit margins by the end of the year? Is that a possibility?
I would say that the Q1 margins will be, we should be able to sustain the Q1 margins because, like I said, the milk prices at a farm level is stable. That means that the margins would continue to remain interesting for us to drive growth. At this point in time, we believe that we need to invest in the market to drive growth. We're at a stage, if I can talk about value-added dairy. In India, we are still at a very, very, very nascent stage. Many of the categories are in single-digit penetration as households are concerned. So we continue to invest to drive long-term growth, and we will be able to deliver the bottom line similar to Q1.
All right, take that point. So 9% sort of margin should continue for this year. Final question from our end. There was a marked shift in the way the street looked at your stock, largely after the election outcome. So just wanted to know, what could the tailwinds from a favorable policy or political environment be for players like you right now?
See, we are a business that is run professionally and independent of the political or, whatever is the regional scenario. In fact, as a company, we are based in Hyderabad, as you know. Hyderabad is our headquarters. So Telangana happens to be our largest market. So I don't think that there is any relationship between the two.
All right. Thank you for clarifying that, Rare Voice, and giving us good growth outlook out there as well. Wish you good luck for the year and the years coming ahead as well. With that, we take a short break, come back, focus on the macros, Federal Reserve's big interest rate cut decision, and how past cycles have impacted markets. Stay tuned.